think it's unlikely that today anybody can predict outcomes. I think that the best that we all can do it really is predict process and try to look into what the world over the course of the next 6 months is likely to be presenting us with. And I think what we'll see is a level of volatility in the government and regulatory reaction that mirrors the level of volatility that we've seen in the financial markets over the last couple of months. And so I think what we're going to look at a government process, despite David's hope that perhaps it will be deliberate, well-researched, and calm, which is likely to be reactive and likely to have things, congressional committees, newly appointed regulators, and newly empowered actors asking questions and making proposals which to people who are intimately familiar with the current structure of financial institutions seem poorly informed. I think that both potential litigants and overseers will be asking questions which, one would think most people in this room might think they know the answer to. They're going to be asking, what's a hedge fund? Is it different from a private equity fund? What if it's leveraged 30 to 1? Does that make a difference? Right? Is that different from an investment bank? Is that different from an insurance company? Right? What if the insurance company is leveraged 50 to 1 and holds primarily hedge fund-like instruments? Does that make it an insurance company or a hedge fund? What is a commercial bank? Does a commercial bank and an investment bank, are they the same thing or something different? A year ago, those might have been easy questions to answer, sort of economic structure 101. I think for the next year, people who don't know that the answers to those are one thing or another are going to be asking the questions and coming up with answers which are informed by the last 6 months of performance, not by some idea of what ought to be. So that's like a level of uncertainty, both about a regulatory structure and about the authority and the ability of financial institutions to invest and commit credit, which from the point of view of a private equity investor will make it difficult to make substantial commitments because the regulatory environment is not going to favor the ability to forecast.